The pain trade is higher as markets continue to string together a rally. Can they get above critical resistance? That's what we'll look at today on 3 Minutes on Markets and Money. As we discussed yesterday, of course, as we start to move forward to the end of the year, a couple of things coming up here that could help lift markets into the end of the year. The first, of course, is that buybacks are about to come back in force. There's over $1 trillion worth, the most on record, of authorized stock buybacks in 2022. A lot of those have yet to be executed. So coming out of this buyback window going into the end of the year, we could see as much as $5 billion a day of buying coming into the market just from stock buybacks alone. But also, coming up November the 8th, of course, is midterm elections. Historically, over the last 18 midterm election cycles, stocks have been higher 12 months after the midterm elections. So midterm elections tend to be a little bit better for stocks. And coming out of this particular midterm election, because of all the angst and turmoil and division in the country, a gridlocked Congress may very well be the best opportunity for stocks to continue to rally here because, of course, there'll be a reduction in the probability for some policy that is anti-market friendly, higher taxes, those type of things. Outside of that, of course, the Federal Reserve is also the other key issue. Now, that's on Tuesday and Wednesday of this coming week. The Federal Reserve will have their next meeting, expected to hike by 75 basis points. But coming out of that meeting, what markets may want to hear and may like to hear is that the Fed is now beginning to put into a policy of slowing the pace of rate hikes moving into next year. After 4 75 basis point hikes, that will not be a surprise. Even though they're still hiking rates, the expectation will be is that they'll be finished sooner than later. That could also give some lift to stocks into the end of the year. Of course, with all the negative positioning, there's a lot of buying opportunity here for stocks. So again, if markets can break above this 3,800 level, we tried that yesterday. Markets did get above 3,800, just weren't able to hold it for the close of business. Markets looking to open a little bit soft this morning, but we could get some additional buying today as well. Earnings have been coming in fairly strong this morning. Today we have Microsoft and Google announcing earnings, and on Thursday, Apple and Amazon. So this week is kind of all the big cap names. By the end of this week, roughly 80% of the S&P 500 will have reported earnings. So again, earnings have been better than expected, or should I say not as bad as expected. That's also giving a little bit of lift to stocks. If markets can maintain a rally here, get above this resistance, 4,100, which is where the 200-day moving average is certainly well within the context of where we'll get to. And again, doesn't solve the problem that we're still in a long-term downtrend of the markets, but a rally here through the end of the year, not surprising here. But again, as we've talked about before, as we get into next year, as earnings start to slow down, as the economy slips potentially into a recession, we could see lower prices as markets reevaluate, what earnings are going to be in a slower growth economic environment. But for now, we'll take what we can get, take the rally, sell into it, and of course, we'll reposition after that. That's 3 Minutes on Markets and Money. We'll see you back here tomorrow.